Hi everyone and welcome to DeFi Daily, the channel where every day we talk about DeFi, going through different analysis, tutorials and news. Today we're going to talk about Mirror Protocol, and more specifically we will go through a complete tutorial and a step-by-step guide on how to use this platform that we talked about just some hours ago. If you missed that video, I will leave you also the link in the right corner here so you can have a complete overview on it and you can understand why the Mirror Protocol or into the DeFi ecosystem of Terra is really a break-changing platform. And before to start, I would like to ask you to subscribe to the channel. It's really easy. All you have to do is just press the subscribe button, and please leave me also a thumbs up to help me spread the word and reach more people. Always remember that all the contents in this channel are just for educational purpose and nothing has to be intended as a financial advice. If you want to invest in anything, that could be great, but please do always your own research before investing in anything. Said so, we can jump into the platform, starting obviously with the Mirror Protocol homepage. This is the homepage that we have seen previously, and as you can see here, if you click on Web App, you can see that you have two different options. On one side Terra, on the other side Ethereum, because the Mirror Protocol is supporting both of the blockchain. If you click on Terra, you will go into the app of the Mirror Protocol on Terra, and I highly recommend you to use the Terra version instead the Ethereum ones, because it's much more complete and it is offering you much more feature. We will see later also the Ethereum version, but as you will see, it is offering, at least until now, only some basic feature. Okay, let's go. And everything starts with the dashboard, and here you can find all the different metrics about the Mirror Protocol, starting from the total value locked, the liquidity, the volume for each day, and also the price of Mirror. Here you can find also the mirror circulating supply. It means how many mirror are on the market and are available to be exchanged, to be swapped. And down here you have also all the metrics about every single mAsset. As we said previously, every mAsset is just a blockchain, a digitalized version of a stock of an asset that exists into some other markets. In this case, most of the time we are talking about stock that are available in the traditional stock market. Remember that all the different assets are not backed by any real stock that has the price tied to the original price through all the mechanisms that we have talked about in the previous video. Let's go into let's dive into the platform. The first label that you can find is My Page, where you can find all the metrics about your account and your investments. The second one is the trade feature, and here you can find the whole list of the different assets that are available to be traded. As you can see, there are many of them. Most of them are just stocks, but you can also find an Bitcoin that is a Bitcoin represented into the Terra blockchain through the Mirror Protocol, so it's a mirror Bitcoin, and so on. For each asset you can simply click on it and you will jump into an interface that will allow you to swap the different assets, to trade those assets. You can buy them or sell them. As you can see from this interface, at least until now, the only asset available to use to pay to buy any kind of asset is USD. So if you want to use a Mirror Protocol, be sure to have some USD on your wallet. On one side, because all the payments are going through USD, but also because the transaction fees are paid with USD. Once you have choose the amount of USD that you want to invest, you have to choose the asset that is interesting for you. And after that, you can simply confirm the transaction and you are done. You can also place a limit order. The only difference that you don't have only to decide the amount of the asset that you want to buy, so the amount of USD that you want to invest to buy this kind of mAsset, but you can also decide the price at which you want to buy that kind of mAsset. Let's say that right now, as you can see here, the price of this mAsset is 111.46. Let's say that you want to buy it at 110. All you have to do is just write here the price at which you want to trigger your order, and you are done. When the price of this mAsset will reach, if it ever will happen, the price that you decided, your order will be triggered and you will receive your mAsset into your wallet. At the same time, what is going on in the sell feature is completely similar. You have to sell obviously the mAsset that you own, and on the other side you will get some USD. Also here you can use the limit order. That is almost the same as we said previously. The only difference is that you can choose the price at which you want to trigger your order. Okay, going on, and let's go through the third feature, that is the borrow feature, and it's probably one of the most interesting. Because let's say that you want to borrow, so for example, some Google. All you have to do is to select the mAsset that you want to borrow. Let's specify that the action of borrowing an mAsset, it is the equivalent of minting it, because it is like creating some new mAsset to put it on the market through the action of borrowing it. Because how does it work? It works that you choose the amount of USD or let's say any other asset that is supported. For example, Luna, AUSD. AUSD are the anchor USD, and you will receive AUSD in the moment when you deposit some USD into the anchor protocol. And if you missed that video, I will leave you also the link in the right corner here. And it is really interesting using this kind of AUSD, because you can build some strategy that is using the liquidity you have provided into the anchor protocol to leverage some other yield on, for example, Mirror protocol. Anyway, don't bother if it's not clear, this kind of mechanism. I will do a complete video on what kind of strategy you can apply to compose the different platforms into the Terra ecosystem, because there are some of them that are really interesting. Okay, all you have to do is to choose what kind of asset do you want to provide as a collateral. Once you have choose it, let's say that it's okay using USD, you have to choose the amount of USD that you want to provide as a collateral. After that, you have to set the collateral ratio. What does it mean, collateral ratio? When you have a collateral ratio of 200%, it means that the collateral that you have provided is 2 times higher than the amount of mAsset that you are borrowing or you are minting. As you can see here, accordingly to the amount of USD or any other asset that you have provided as a collateral, down here, also the amount of mAsset that you will receive will change accordingly. Once you have done, all you have to do is complete the transaction. Remember that you have to pay a transaction fee. The transaction fee, you can find it here. Remember that the price that you are borrowing here, it's not the same that you are finding in the trade feature. The two prices are different, because in the trade feature you only have the price that is produced by all the swapping actions done through the trade feature. Here, the price that you are receiving as the borrowing price is the price retrieved through an oracle, and more specifically, the oracle that Mirror protocol is using is Band protocol. Band protocol is also a crypto that I think that is really interesting, and I highly suggest you to have a look, because it could be a gem, it could be an asset that is undervalued right now. And that's not a financial advice, but I highly recommend you to have a look and to dig into that project, because the Band protocol is the oracle used in the whole Terra ecosystem. And with the Terra ecosystem that is growing like crazy in the last couple of months, but also in the next couple of months, with any probability, with more projects that are coming into this blockchain, I think that also the Band protocol could benefit from all of these changes. Anyway, let's go back to our borrowing feature. We have understood so that the price that Mirror Protocol is using to let you borrow some mAsset is the price that is provided by the Oracle, that is the price into the traditional stock market. Another thing that you have to remember, as you can find it here, for every time you go to close the transaction, you have to pay a 1.5% of fee. And the reason of this fee is to help the price stay to converge to the real price and to avoid some unfair and incorrect use of the platform. So let's try to summarize this feature, because it's really important that you understand how does it work. Borrowing an mAsset means that you are minting, that you are creating some new mAsset. This mAsset is creating using the collateral that you have provided, and you have different options of collateral that you can use. As you can see here, the minimum amount of collateral that you have to provide to mint any other new mAsset is 150%. It means that if you put inside $150, you can borrow at maximum of 100 mAsset that you prefer. Remember that if your collateral ratio goes beyond 150, you will be liquidated. There are some liquidators that have the possibility to take your position at a discounted price. So it means that you are not only losing your position, but you will have also to pay some liquidation fee. Pay really attention to it and choose an amount of collateral that is safe enough, because the more the price is volatile, I'm saying the price of the asset that you are using as a collateral or the asset that you are minting, the mAsset that you are borrowing, more volatile they are, easier is to be liquidated, and for this reason it's better to choose a safer ratio of collateral. Going to farm, that is probably the newest feature that is introduced, that has been introduced by Mirror. Because through Mirror you are not farming only in the traditional way, that is just putting some LP tokens into a farming pool and you will start earning some yield. What is new about the Mirror protocol that is allowing you to farm long and farm short? What does it mean? Let's go through an example. Let's say that you wanna farm some mCoin. mCoin is the Mirror Coinbase stock. And as you can see, here you can find two different yield. 23.77% when you farm long, or 41.71% when you farm short. What does it mean? That at the moment the yield if you farm short is higher. The percentage could change during the time according to various factors. One of them is the premium price. The premium price means the difference that is actually between the Oracle price, so the price of this stock into the traditional market, compared to the price of the mAsset that you can find, for example, in the trading feature that we have seen just a moment ago. Okay, let's go into each of them. Let's try to farm long. All you have to do is to click into farm long, and the mechanism is quite close to any kind of other farming feature that you have seen on any other DeFi platform. All you have to do is to decide the amount of M coin, in this so the mAsset that you already have in your wallet that you can have bought or borrowed through the platform. Choose the amount. Let's say that we have 100 on M coin, and automatically the system will complete also the field about the USD, because remember, it's like farming is like adding liquidity to a pool. That's the reason why in this interface they are asking to you to add some liquidity, and the liquidity of the two assets has to come in equal value. So according to the amount that you choose here for the mAsset, also the amount of USD that you have provided will be completed. To farm any kind of asset, you will have a pool that has inside USD plus the other mAsset. As you can see here, you can find also the transaction fee down here. Once you have completed all the fields, you will have to press farm, and you are done. So as you can understand, it's just like adding liquidity to any pool, and you will start earning some rewards. Remember that all the rewards for the farming long and short are paid in MIR. MIR is the token of the Mirror protocol. Okay, understood how does it work the farming long. Let's try to understand how does it work farming short. All we have to do is click here, and we will find this interface. The first thing that will be asked by the interface is to provide some USD as a collateral. The logic behind farming short is quite close to what you are maybe used to find into any exchange that allows you to short through any kind of derivatives like a future or whatever you are using. Shorting, what does it mean? That you don't have the asset, because it's like selling without having it. So for this reason, the system is asking you, okay, first of all, provide me some liquidity, provide me some collateral, and here you can find all the collateral that are allowed. You have to choose the amount. Let's say that you wanna use 100. And down here you have also to choose the collateral ratio. As you can see in this case, the minimum collateral ratio is 200% and the safe collateral ratio is 250%. The reason why you have to choose an amount that is safe is related to what you can find it here. Asset will be borrowed and sold. Position can be closed by repaying the borrowed amount. What does it mean? That through this feature you are borrowing the asset and you are selling it into the market. And from that moment on, you will start earning some rewards related to the farming short. But to close this position, you will have to repay the borrowed amount. It means that you will have to bought again the asset that you have just sold. Let's say in this case that you are borrowing M coin, you are borrowing it, you are selling it into the market, but after that, when you will have to close the position, you will have to buy back your M coin from the market, or if you want, you can also borrow it again and come here and close the position and repay the debt that you have used to open another borrowing position with some other USD or whatever you want. What is important for you to understand is that if you want to farm short, it means that you have to borrow an asset through the collateral that you have provided inside this feature. The system will sell your borrowed asset, and in the moment when you will decide to close this position, you will have to buy back and repay your debt. But there is also another interesting feature in this mechanism, is that after 2 weeks you will receive in USD half of the value of the amount that you have borrowed in mAsset. So let's say that we have just used $100 as a collateral. Let's say that we have used a safe collateral ratio of 200%. It means that after 2 weeks you will receive 51.48 USD back. So you will have other liquidity to use into the market. Remember that if you increase the amount of set collateral ratio, as you can see, also the amount of USD that will be returned is less, because you have to maintain a higher amount into your position to stay safe and avoid liquidation. Here you can find also the amount of transaction fees that you have to pay, and even here, the same that we have seen for the borrowing feature, you have to pay a 1.5% in the moment when you will close your position. As you can see, the farming concept is always the same. So you are providing some cryptos and you are start earning some other cryptos. But the way that Mirror Protocol is realizing it is slightly different on what we are used to have in all of the other DEXs. And it's something that I really like. I love the way of the different protocols are trying to innovate the industry, because yes, we need more services that are able to produce more value, to produce more ways to use our cryptos, and shorting something and start earning yields through the farming feature is something that could be interesting. Remember that before using any kind of platform, even if it has some great yields and even if it looks like a great opportunity, please be aware of the risk and be sure to have a completely understanding on how the platform works and have clear how all steps can affect in any way the real value, the real yields that you will gain at the end of the process. Okay, let's go also to the last feature of the platform. The last feature is the governance feature, and it is where you can stake your MIR. MIR is the token that you are receiving through the farming, and you can come here, manage staking, and you can simply add your MIR to stake, or in case you have already staked them, you can unstake them here. The amount of interest that is paying right now is around 15%. As you can see here, there is written APR. It means that this kind of yield is not a compounded yield. If you want to know more about the difference between APR and APY, I will also leave a link in the right corner here. In this interface, you can also vote and you can use your MIR to participate in the governance of the protocol. Let's have a look now also to the Mirror protocol on Ethereum. All you have to do is to go to the homepage of the Mirror Finance, click here on Ethereum, and you will be redirected to the homepage of the Ethereum Mirror protocol Finance. As you can see, there are not many features. There is not the possibility to farm long or short. It is using the liquidity on Uniswap. As you can see here, for each pool, you have a label that will redirect you to Uniswap to buy the token. As you can see, you can buy it from here. And also, always on Uniswap, you will have the opportunity to add liquidity. And once you have added liquidity, you will be able to come back inside the ETH Mirror Finance protocol, and you will be able to add liquidity. In this case, I'm not allowed to do it for the simple reason that I haven't connected my wallet and I don't have any LP tokens on Ethereum. But the process is quite easy. All you have to do, first of all, buy the token. Once you have the token on Ethereum, because remember, one thing is having the tokens on Terra, another story is having the tokens on Ethereum. and you have two different options. On one side, you can move your tokens through one blockchain to another, obviously paying the transaction fees for this kind of movement. Otherwise, you can buy them again from Uniswap. Once you have both of them, the token of the pool into your wallet, you can provide liquidity. Once you have provided liquidity, you can simply come back into this interface, click Stake LP, and in this interface here, you will find a feature that will allow you to add the liquidity. As you can see, the features available on Ethereum are still quite basic, and we will see in the next future how the platform will evolve and if they will integrate also all the farming feature that we have seen into Terra. Obviously, Ethereum has other peculiarity, because if Terra has some really low transaction fees, on the other side, Ethereum has much higher transaction fees. It means that many of the features that can be available on other blockchains are quite more unfriendly to implement on Ethereum. That's one of the reasons because you can find some discrepancy between what you have on one blockchain and in the other one. So I hope that this overview and this tutorial step by step helped you, and if you have any question, feel free to write me into the comments below and I will be more than happy to answer to you. What I can say is that I like Mirror Protocol because it is introducing some new dynamics and introducing something new inside the DeFi ecosystem that we are not seeing many times in other platforms. We will see how the platforms will evolve because obviously it is too early to make any kind of judge. We see some great potential, but obviously it will take some time to understand in which direction is headed and how the whole market is reacting on a service like this one. Guys, thank you for following me, and please leave me a thumbs up to help me spread the word and reach more people, and I will see you tomorrow with another video. Thank you guys. See you tomorrow.